John Templeton wasn't born into wealth. In fact, his journey to becoming one of the world's greatest investors started in a small town called Winchester, Tennessee, during one of the toughest economic periods in history, the Great Depression. Born in 1912, Templeton grew up in an era when financial hardship was common. But while many saw despair, Templeton saw opportunities and attitude that would later define his legendary investing career. As a young boy, Templeton exhibited a deep curiosity about the world and a keen sense of discipline. His mother taught him the values of hard work and thriftiness, while his father, a lawyer and businessman, instilled in him the principles of risk-taking and independent thinking. When Templeton earned a scholarship to Yale University in 1930, the United States was still reeling from the 1929 stock market crash. Millions were unemployed, businesses were failing, and Wall Street was in chaos. But instead of being discouraged by the economic downturn, Templeton viewed it as a learning opportunity. At Yale, he studied economics and developed an interest in stock market cycles, realizing that periods of fear often presented the greatest investment opportunities. By the time he graduated in 1934, Templeton had already made up his mind. He wanted to be an investor. The problem was he had no money of his own. So he took a job at a brokerage firm on Wall Street, where he observed firsthand how emotions, panic, greed, and fear drove market behavior. He quickly learned that the key to success was not following the crowd but thinking differently. Templeton believed that the best opportunities arose when everyone else was pessimistic. And he was about to put this belief into action in a way that would define his career and make him a fortune. By the late 1930s, war clouds were gathering over Europe. The world was on the brink of World War II, and fear gripped the financial markets. Stock prices had already been battered by the lingering effects of the Great Depression. And as tensions escalated, investors rushed to sell, believing an all-out war would trigger another economic collapse. But John Templeton saw things differently. In 1939, when Hitler invaded Poland, most people expected markets to crash further. However, Templeton believed that war, while devastating, would eventually lead to economic recovery due to increased government spending and industrial activity. He also knew that stocks were already trading at rock-bottom prices. And when markets are down, opportunities arise for those willing to take risks. With just $10,000 borrowed from his former boss, Templeton made one of the boldest investment moves in history. Instead of buying a handful of well-known stocks, he did something almost unthinkable. He purchased 100 shares in every company listed on the New York Stock Exchange that was trading at $1 per share or less. In total, he bought shares in 104 companies, including some that were in bankruptcy. His reasoning was simple yet revolutionary. If even a small percentage of these struggling companies survived the crisis, their stock prices would multiply in value. And if the economy rebounded after the war, even the weakest companies had a chance to recover. At the time, most experts considered this strategy reckless, but Templeton was unfazed. He had studied history and understood that moments of extreme pessimism often marked the best buying opportunities. His approach was based on optimism, patience, and an unshakable belief in long-term market cycles. As expected, the markets remained volatile throughout the early years of the war. Some of the companies Templeton invested in went bankrupt, but many others survived and thrived. As the U.S. entered World War II and wartime production boosted the economy, stock prices began to recover. By 1944, just 5 years after his bold investment, the market had turned around, and his portfolio skyrocketed in value. The struggling companies he had purchased for pennies had multiplied in price, and Templeton made a 400% return on his investment. His initial $10,000 had turned into $40,000, a small fortune at the time. This incredible success cemented Templeton's reputation as a visionary investor. But this was just the beginning. John Templeton's success during World War II was no fluke. It was the result of his deep understanding of market psychology, his willingness to go against the crowd, and his unwavering belief in long-term investing. His early triumph provided him with both the financial capital and the confidence to continue his career as a contrarian investor. In the years following the war, Templeton didn't rest on his laurels. Instead, he began refining his investment philosophy and looking beyond the U.S. stock market. While most American investors focused only on domestic opportunities, Templeton saw the potential for growth in international markets. By the 1950s, he started investing heavily in Japan, a country still recovering from the devastation of World War II. At the time, Japan's economy was in shambles and few investors believed it would ever become a major financial powerhouse. But Templeton, always ahead of his time, recognized that Japan's manufacturing sector was rapidly modernizing and that the country's workforce was highly disciplined and innovative. Between the 1950s and 1960s, he bought large stakes in Japanese companies when their stocks were trading at incredibly low valuations. His investments in Japan would later pay off tremendously as the country's economy surged and Japanese stocks skyrocketed in value over the next 2 decades. But Templeton's investment strategy wasn't limited to Japan. He believed that to find the best opportunities, an investor had to be willing to look anywhere in the world. This belief led him to establish the Templeton Growth Fund in 1954, one of the first ever global mutual funds. While most investors remained focused on their home markets, Templeton was traveling across continents, searching for undervalued stocks in Europe, Asia, and emerging markets. His strategy was simple yet powerful: buy companies in countries experiencing economic hardship, hold them for the long term, and sell only when optimism returned and prices rose. He followed this approach religiously, often going against conventional wisdom and making investments where others feared to tread. Over the next few decades, Templeton's fund delivered phenomenal returns, outperforming most mutual funds and establishing his reputation as one of the greatest investors of the 20th century. His ability to see opportunity in crisis and his discipline in sticking to his investment principles made him a legend in the financial world. But his greatest test was yet to come, a market crash that would shake investors to their core. By the 1970s and 1980s, John Templeton had already cemented his status as a global investing pioneer. His Templeton Growth Fund had been outperforming the markets for decades, and he had made a fortune by investing in undervalued stocks across different countries. But what truly set him apart was his ability to remain calm during times of panic, a skill that would once again make him millions. Throughout his career, Templeton had witnessed multiple stock market crashes. Instead of fearing them, he welcomed them as rare buying opportunities. He believed that the best time to invest was when others were running away from the market, a lesson he had learned from his 1939 investment strategy. This belief was put to the test in 1987 during one of the worst single-day stock market crashes in history, Black Monday. On October 19, 1987, the Dow Jones Industrial Average plummeted by a staggering 22.6% in a single day, wiping out billions of dollars in wealth. Investors panicked, fearing a repeat of the Great Depression. But Templeton remained unfazed. Instead of selling in fear like most investors, he once again saw an opportunity. He began buying stocks aggressively, confident that the market would recover. And he was right. Within 2 years, the market had rebounded and the stocks he bought at rock-bottom prices had doubled or even tripled in value. His philosophy was simple: the moment of maximum pessimism is the best time to buy. Templeton didn't just preach this idea, he lived by it. He also proved that crises weren't just financial, they could also be political. During the 1990s, when the Soviet Union collapsed and Eastern European economies were in turmoil, Templeton saw a golden opportunity. While many investors feared the instability in former communist countries, Templeton recognized their potential for economic transformation. He invested heavily in emerging markets like Russia, China, and Latin America, where stocks were trading at steep discounts. Once again, his strategy paid off. As these economies transitioned to free markets, they experienced rapid growth, and Templeton's investments yielded massive returns. His ability to profit from global crises wasn't based on luck. It was the result of disciplined research, patience, and a fearless willingness to go against the crowd. While others panicked during uncertainty, Templeton thrived. But despite his financial success, Templeton believed that wealth wasn't just for personal gain, it was a tool for helping others. By the time John Templeton retired in the late 1990s, he had built an empire worth hundreds of millions of dollars. But unlike many wealthy investors who focused solely on accumulating riches, Templeton believed that money was only meaningful when used to serve others. In 1987, he renounced his U.S. citizenship and became a British citizen, moving to the Bahamas, where he spent his later years. While many speculated that this move was for tax purposes, Templeton had a different reason: he wanted to dedicate the rest of his life to philanthropy. He established the John Templeton Foundation, a charitable organization focused on advancing scientific research, spiritual discovery, and education. The foundation became one of the largest private philanthropic institutions in the world, funding groundbreaking research on topics ranging from physics and cosmology to human purpose and consciousness. One of his most notable contributions was the Templeton Prize, an award given annually to individuals who made exceptional contributions to spiritual and scientific understanding. Unlike the Nobel Prize, which focuses on traditional fields like physics and medicine, the Templeton Prize honored thinkers and leaders who explored the relationship between science and religion. Templeton's generosity didn't stop with his foundation. He also donated millions to universities, medical research, and programs that promoted free markets and entrepreneurship. He firmly believed that curiosity, hard work, and faith were the keys to both financial and personal success. Even in his later years, Templeton continued to offer investment wisdom. His advice remained simple yet profound. Buy when others are fearful. The biggest opportunities arise when markets are in crisis. Think globally. The best investments aren't always in your own country. Seek opportunities worldwide. Stay humble and learn constantly. Even the smartest investors can be wrong. Be open to new knowledge. Give back to society. True wealth isn't just about money, it's about making a positive impact. John Templeton passed away in 2008 at the age of 95, leaving behind a legacy far greater than just financial success. He showed the world that great fortunes can be built during times of crisis, but even more importantly, that wealth should be used for the betterment of humanity. His life remains a testament to the power of vision, discipline, and optimism, proving that those who dare to think differently in difficult times can achieve extraordinary success. John Templeton's story isn't just about making millions, it's about embracing challenges, thinking independently, and staying committed to long-term goals. Whether you're an investor, an entrepreneur, or simply someone looking for inspiration, his life teaches us that opportunities exist in every crisis. The key is having the courage to seize them.